Hello, this is Erin Swenlin from DecisionPoint.com with your Daily 5. Looks like I'm the first one up this year, so I thought that I would go ahead and look at monthly charts and give you a little bit of an overview of what I'm looking at going into this year. But before I start with that, I do want to let everybody know that I have a free trading room. I do it every Monday. In fact, I have one right after this recording from noon to 1 p.m. on Mondays. If you go to the website, decisionpoint.com, you can sign up right there. All right, so as I said, I'm going to do a yearly wrap. We're going to look at the monthly charts of the SPY and then what I like to call the big four. So we'll go ahead and jump right in. So first, we're going to look at the S&P 500 as represented by the SPY. So this is the monthly chart of the SPY, and there are quite a few interesting things to note on this chart. First of all, I would say I'm just going to go right on down here to our price momentum oscillator. And as you can see, it has been rising nicely. It's continuing to rise. And that started, believe it or not, midway through 2020. That's when we got that last PMO buy signal for the yearly PMO. Now, the RSI right now is very, very overbought. I do want to let everybody know as well that this chart is from last Friday, so that you know it is the closing one. There is nothing on here from this year so far. But one of the things that I wanted to note was that you can see that we have parabolic advances going on here on the monthly chart. Parabolic advances are, they start kind of flat, they get a little bit, the price trend starts to rise more and more quickly until finally you're rising at a more vertical rate. So we were on that path when we started into 2020, and COVID likely just spurred things on. But we had the parabolic advance, and with parabolic advances, they are going to break down. They are going to break down very quickly and almost always very painfully because they are a pretty quick drop. Now, of course, we're looking at a monthly chart, so we do know this took at least a few months to develop and to begin to see that gravity pulling it down. So we're kind of in that situation, in my opinion, going into 2022. So you can see right here, we have another parabolic formation, and what we're looking for would be a drop. The RSI is very overbought, but the PMO, it is overbought, but it is still rising. So I'm not sure how much longer we're going to be able to eke out these all-time highs. I think we're going to probably need to see a little bit more of an even more vertical rally going on. But, you know, we're starting off January with a little bit of concern out there, and I know people are worrying. Let's look at the dollar UUP. Again, in this case, this is the weekly chart for UUP. So you can see that this year we formed kind of a double bottom on the dollar, and then we got that breakout. Took a little while to get the breakout, kept trying, was failing, tried again, failed, but we've just recently seen a nice breakout and a flag formation. The issue is that when we finished this last month, we finished near the very low for the month. The low was 25.62, and it closed at 25.63 by the end of the week. So it did finish near its lows. That's never a good look. You can see that the RSI, while positive, the weekly RSI is still falling, and you can see the weekly PMO on the dollar has begun to tip over, which is something we really don't want to see as well moving into 2022. Next up is gold. Everybody wants to know what's going to happen with gold. This is the monthly chart for gold, dollar gold. And there are a few interesting facts that we can lay out on this chart. First of all, look at this, another parabolic advance. And as you can see, when it broke down fairly quickly, and then we began to consolidate, which is really all that has been going on with gold this year. It's really moved mostly sideways the entire year. And, you know, at this point, gold does look bullish right now moving into 2022. We have what you could consider a flag formation here on the end of a flagpole. It's just taking its sweet time to break out and give us what we're expecting on the, sorry about that. It's taking a little bit while after breaking this declining trend to continue upward and actually execute this pattern. So we're still kind of waiting on the pattern to finish. This is on the monthly basis, and all of us, who follow this on a daily and weekly chart know how gold is just really tortured in its advances, as Carl says from decisionpoint.com, my father. So, I think it looks good going into next year, but we do have to deal with this overhead resistance at about 1900, 1910, it looks like. But we do have these indicators starting to look better. The monthly RSI is positive and rising, and the monthly PMO, it is a little bit flat, but it does look like it is ready to turn and rise. And then we can see two other windows that I have for the indicators. We track the premium and discount for the closed-end fund of the Sprott Physical Gold Trust, PHYS. And when we get discounts, that tells us that people are very bearish on gold. And when we get premiums, people are paying extra for the amount of gold that is being held by Sprott for that fund. So that tells you people are very bullish. They're willing to pay a premium on the price. Well, right now we've been seeing a lot of discounts. That's good for gold. I'd like to see them a little bit deeper. I think that would help push gold over that overhead resistance. If we could just get people even more bearish, because sentiment is contrarian. So if you see people being very bearish, if everybody jumps on that bandwagon, usually the wheel will fall off. So sentiment is contrarian. We want to see more bearish sentiment, and that's what we're seeing right here. The other thing I wanted to point out was the correlation of gold to the US dollar. Now, typically it is a reverse correlation, almost a perfect reverse correlation at -1, meaning that if gold rises, if the dollar rises, then gold is going to fall. That is because gold is denominated in US dollars, so it's very dependent on how much the dollar is worth. So we look at the correlation so that it can give us an idea that, hey, if I'm feeling bullish about the dollar, does that mean that necessarily gold is going to be falling? And you can see that with the correlation over the very, very long term, you can see back here in 2007, 2008, we really hit where we're supposed to be there as far as the reverse correlation goes. Other than that, we've been really moving back and forth, but usually in the negative, right below the zero line. We popped up above that in 2019 and 2020, meaning that gold was traveling in the same direction as the dollar. Right now, it's leaving that reverse correlation. It is starting to rise, meaning that gold is slowly, very slowly decoupling with the US dollar. And again, we can watch for if dollar is going to go up, it's perfectly logical that actually gold could as well, based on the long-term correlation. All right, two more to go. Crude oil. This is WTIC, the West Texas continuous contract for crude oil. And it's been a really interesting look. I'm very bullish on oil going into the coming year. And if you watch the special on StockCharts TV, the end of the year special, I did one on oil because I'm very bullish on oil. And you can see even the monthly chart looks quite bullish in my opinion. We have a monthly RSI that is positive and is now ticking back up. And you can see that the PMO is rising. Yes, it's on the overbought side. Don't like to see that. But what I do like to see is a positive divergence with the PMO. So price is moving lower, the price bottoms, PMO bottoms are rising. And so that's a good sign going into a rally. This works on any kind of chart, a daily, weekly. So what we're seeing here is a double bottom. We're seeing a positive divergence, and we're just now hitting that confirmation line for this very large double bottom. And we failed the last time we hit the confirmation line to break out, but it looks like we're headed right back up here, and I would be looking for a breakout going into this year for crude oil. Finally, we're going to finish with the 20-year bond ETF TLT. And this is also a monthly chart. As you can see, the PMO on the monthly chart for TLT is looking pretty bearish. It is headed lower. Looks like it had tried to turn back up, and now it is topping. Not a good sign. Really what we're going to be paying attention to are yields, obviously going into next year. And the Fed has pretty much told us that they will be tapering and that we will see some rate rises. And that is going to put pressure on bonds. So we believe when we look at this that in the back of our minds that the 20-year yield is going to be rising. So given that we have the PMO topping below its signal line on the monthly chart, and we also can see that RSI turning back down, you could also make out a rising wedge here. I didn't annotate the rising bottoms on this, but you can see the tops right there. That's a rising wedge. That is a bearish pattern. It tells us to expect a breakdown. So, this year bonds have been honestly spending a lot of it. We had the big rise and now we're consolidating. But now it looks like we did peak out above that area of overhead resistance. And it does look like TLT really does want to break out of this long-term rising trend, but I just don't see it with that PMO looking as negative as it is, and knowing that rates are going to be rising. It's not going to be helping bonds. All right, that does it for me. I would welcome you to come check out my website at decisionpoint.com. We just wrote the yearly wrap, so you would get way more than what you just saw if you subscribe to the DP Alert. We also have our 2-week trial running, DP trial. As a coupon code, you get a free week. And I believe we still have a buy one, get one that is still running right now for our holiday special. That's all I have. Again, Erin Swenlin with DecisionPoint.com. Thank you so much for watching your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.